Wolf, Beyond Meat will likely price beyond the company's initial expectations since it already hiked the range that it had been marketing to investors. Now, the company makes plant-based alternatives in 3 categories: beef, pork, and poultry, but their flagship product is the Beyond Burger, which the company says is designed to look, cook, and taste like traditional ground beef. Beyond Meat's products are sold in 30,000 points of distribution, primarily grocery store chains like Kroger and Whole Foods, and through partnerships with restaurant chains like TGI Fridays and Carl's Jr. Beyond Meat says it employs 63 scientists, engineers, and chefs to create and test the food, and they started monetizing about 3 years ago, and in 2018 sold about $88 million worth of meat alternatives. Thanks largely to R&D expenses and administrative costs, Beyond Meat remains unprofitable, although its losses have been relatively stable throughout the last 3 years as top-line growth has more than doubled each year. And yet, investors still seem ready to assign this deal a market cap around $1.5 billion when it begins trading tomorrow. And here's an interesting nugget to close things off, no pun intended, from the risk factor section of the prospectus. Beyond Meat's main ingredient is actually pea protein, which is sourced from Canada and France. The company says price fluctuations of peas due to bad harvests or trade wars could impact their costs, guys.
Leslie, I love it, and I love the puns to start and close it off. But
they also use beets to make it look like, you know, the burger's like has blood, is bleeding.
The burgers
like
do look very realistic.
Yes.
That was where I was going to go with this. I haven't actually tried these, and I'm excited to watch Fast Money tonight because I know they're going to be doing some blind testing on this. But either way, Leslie, this growth, and with it, very stable losses, not kind of growing losses, the growth in revenue, does set it apart from some of the other IPOs we've had recently.
Indeed, it shows that what their money is going toward is largely R&D expenses and administrative costs, which can remain stable over the course of many, many years, especially as they continue to kind of reinvest in their business. They also laid out very clearly what they plan to do with the proceeds from this IPO, put more money into those R&D expenses, in which case we could potentially see those costs go down as they use the IPO proceeds to supplement, as well as for working capital and other forms of use cases for them. So, it'll be interesting to see this one, especially as growth really takes off as they sign more partnerships. I was talking to an investor today who was looking at, the potential restaurants that they could really penetrate in 2019 as well as a bull case for this company.